In this video, Jim Cramer looks ahead to next week's game plan. He highlights the recent jobs report's significance for a potential 25 basis point rate cut by the Federal Reserve and discusses key earnings reports from major companies like Oracle, Nvidia, MongoDB, and Salesforce, showcasing the strength in data-centric stocks. Cramer also expresses caution regarding companies with ties to China and highlights inflation pressures that may affect upcoming economic indicators like the CPI and PPI, potentially hindering rate cuts if prices remain high.
Strength, amazing, really fabulous sales because there's practically an endless demand for data centers. Let's see if they're still planning to build those things like crazy. Quickly, Nvidia's stock, of course, the data centers are filled with that, was uncharacteristically weak today. Made no sense because HP Enterprise, one of the biggest customers, reported a blowout quarter last night and said that business with Nvidia is incredibly strong. We'll learn more from Oracle Monday evening, and I'm sure we will find out what the story was with Nvidia stock, too. The story that some had today, and the rest, no doubt, will get on Monday. The other standout should be this company called MongoDB, which is an enterprise database play with tools that help other software developers create applications. For most of 2024, these kinds of stocks were in the doghouse. Market gravitated toward hardware, especially semiconductors. But then Salesforce reported excellent numbers this weekend. The stock soared. While some of that's because the quarter was truly excellent, much of it's just a big change of sentiment toward these kinds of stocks, these enterprise software stocks, which is what they're called, were all doing okay during the lull, but now they're doing better than okay, and their stocks are being greeted with extraordinary buying. Keep track of the enterprise software stocks. Toll Brothers high-end housing reports Monday evening when the Fed cut was announced, the stock flew up. But then it stalled because bond yields actually and surprisingly went higher. Given that mortgage rates are priced off the long end of the bond market, you can see why the stock struggled. And then bond yields came down again, and Toll's been as strong as ever. Can it deliver on these numbers? Is lumber price too high? Well, we won't have to wait too long to find out. Now, you know I've become hesitant to endorse money-losing companies with stocks that are extremely overvalued. After the close, we hear from a company called C3AI, the profitless enterprise software company with a stock that's shot up more than 50% in the last 3 weeks, including 8% just today. Can it keep roaring? In a rational market, no. But in this market, well, you can't afford to bet against any company with AI in its name. Tuesday morning, we get results from AutoZone, AZO. Here we have a company that imports aftermarket auto parts, including some from China. And any company that imports anything from China is viewed with tremendous skepticism right now, right here. AutoZone, though, has a gigantic buyback that kicks in on any weakness. So can it sidestep tariff worries? I can tell you from the disappointing portion of my charitable trust that you simply can't own stocks with China exposure here. That's been the case ever since the election. I don't think anything has changed. So I don't know. I used to love it. I can't load the boat up here. Now, earlier this week, Ollie's bargain outlet caught a rare downgrade, as this purveyor of closeout merchandise has been an outstanding performer of many years. It's a highly promotional moment for retail. This kind of off-price chain tends to be a big winner. Ollie's gets tractor trailer after tractor trailer full of unsold premium-priced merchandise, and they get it for next to nothing. And then they sell the stuff to you at bargain basement prices. I don't want to get off this horse. After the close, boy, here comes complications. Tuesday morning, GameStop, right? They report. Well, speak of the devil, GameStop will most likely deliver numbers that please those who want to be pleased. No, that is not circular reasoning, people. We're in speculative nirvana right now. We have stocks like SoundHound AI and Hut 8 Corp, where there's no real news, but they are just real moves, okay? GameStop seems to have a similar percolation going. Hey, I could have cited the stock of mobile game software company AppLovin. Now, this is a cold stock that soared from 168 to 401 in a month's time on nothing. Boy, that stock doesn't know the word quit. That's right. All week I've been talking about how I'm beginning to see some signs of excess that do make me uncomfortable. I think the reaction to GameStop, both before and after, will tell us whether we need to know about how excessive things have really become. I can't tell you to sell it. You'll blame me if it soars on no earnings, but I can't tell you to buy it either because I don't have any legitimate reason whatsoever to do so. It's a cold stock, and this is a market where people seem eager to drink the Kool-Aid. Like I said, tough moment if you want to be a rigorous buyer of inexpensive stocks that belong to great companies. Wednesday, we start the morning with the CPI, the Consumer Price Index. The Fed meets 2 weeks from now, and if inflation flares up, it'll be pretty darn hard for them to cut rates again. All of us still see high prices when we go to the supermarket, right? So we shouldn't be surprised if the CPI comes in hot. At that point, why should the Fed really bother to cut? Be ready for that kind of chatter. Don't worry, they'll still cut. We also have some corporate news that could help explain something that's been a real mystery, maybe to me, maybe to you. I'm talking about what happened, what went wrong at Macy's, where an employee apparently had millions in delivery expenses hidden. Now, shareholders are entitled to know what really happened here. I don't think the company's fully explained them at all. And we want to know exactly, before we pay any attention to the forecast, we got to understand what went wrong. We need answers about how someone got away with this. And more important, does the company now have the systems to try to catch anything like this malfeasance? I don't know. As I mentioned earlier, the enterprise software stocks have been roaring, reacting very positively to pretty much everything these days. So maybe we should start thinking about buying the stock of Adobe, which has some of the very best software to help businesses with marketing and web design. I like this company very much, but it's been stuck in enterprise software purgatory. Not anymore. Maybe it has a real run by just delivering good numbers. Thursday starts with the producer price index number. Again, we need these inflation numbers. Someone please cool down. There's been so much speculation that we have to worry about what happens if the Fed gets cold feet about rate cuts and pulls the rug out from under us. At this point, at this pace of excess, well, let's just say they might have no choice but to shelve some rate cuts next year. Finally, one of my favorite stocks reports, Broadcom, symbol AVGO, by the way. It reports, and this tends to run up into the quarter and then sell off when we see the actual sales and earnings. I expect that to happen again as Broadcom makes equipment for networking and artificial intelligence, as well as hardware for phones and servers, and hardware is a little out of fashion all of a sudden. Now, we own Broadcom for ages for the Chapel Trust, and I've urged Investing Club members to buy Broadcom on these very dips I just mentioned. It's been a terrific, successful strategy. This time should be no different. So let's understand it goes down after the report, and that's your chance to pull the trigger. Bottom line, look, I'm trying to get my arms around a market that takes up all sorts of crypto, lots of unprofitable companies. Never too great a sign for those who want the Fed to cut repeatedly. I want you to keep that in mind so you won't be surprised if we get some overheated inflation numbers next week and the market gives us some of these extraordinary gains. Let's go to Michael in Pennsylvania. Michael.
Oh, thank you, Mr. Cramer, for taking my call.
Of course.
Merry Christmas to you and your family.
Oh, thank you.
And a Happy New Year.
Excellent.
All right. I'm calling about Ford. It has a yield of 5.9. It has a PE of 13 and a dividend of 15 cents. I know a lot of people don't like it right now because of the threatened tariffs coming from Trump. And I believe that over 40% of our automobile parts and stuff are exported to the United States from Mexico. So what is your outlook? Was it, like buy, sell, or hold?
I bumped into someone this morning walking up the stairs here at the exchange. He said, how come no one's paying any attention to these tariffs? I said, I sure am. And I talked about it. And then I mentioned Ford. I said, look, they've got this really convoluted ownership structure where you could have, of how parts are made and then shipped back and forth. And that's the kind of stock that could really be hurt. I think you've correctly summarized it. And I think even though at 10, it does seem cheap, it's not. And I don't want to own the stock. Let's go to Rich in New Jersey. Rich.
Hey, Jim. Happy holidays and a Jersey Shore booyah from Red Bank, Jersey.
Thank you. I'm an Ocean Grove guy. Good to have you on the show.
Thank you. Thanks, Jim. Jim, my question today is on shares of Dow Chemical. Stock's been getting hammered, down 23% year to date, closing today around $42. Stock hit a high of $60 back in May of this year, and it's been on a slow, steady grind down. Got a nice dividend, 6.5%, and I'm puzzled as to why the stock keeps going down week after week. So,
okay, it's a great question. It's a great question, Rich. And let me just tell you that the numbers keep going down, and that's why the stock keeps going down. Because it still sells at 20 times earnings because the estimates keep going lower, and that is because of China. And when we have these stocks that have anything to do with China, they just tend to hurt and hurt and hurt. I will say this, though. The stock has reached a level where if it goes to 7% yield, and I know the money to be able to afford the yield, I'm going to say you have to buy it.